Hey, what's up, everyone? I want to go ahead and get into this video that we promised to you on Monday in regards to kind of looking at a stock from a short-term, long-term perspective and trying to just think outside of the box when you want to invest. So we're going to use the company Twitter, which is the ticker symbol TWTR, and this is really just for the educational purposes. So you can kind of see how to really try to dissect a stock. We're not necessarily going to look at just charts or any financials. We're just going to try to take the real basic, try to put all common sense into it and try to see how can I look at a stock from a short-term perspective and a long-term perspective. So when you look at a company like Twitter, which is a social media site, everybody, when it first came out, everybody was on it. It was popping, people was jumping. But you've noticed that it's kind of declined in terms of like your access. It's pretty based on certain age groups, and as these younger kids are getting older, they're not really using Twitter anymore. Instagram is very popular nowadays. Facebook hasn't seemed to have gone anywhere. Somehow they figured it out. But when you look at Twitter, its user growth is declining. Now, last week they reported their earnings, and we mentioned this in our Market Mondays about how that they've increased revenue, which is a good sign for the company. It's a great sign. Investors love to hear that. However, with the declining user growth, that can affect that bottom line or their revenues in the future, because now if you're going to have less people trafficking through the area, why would I put ads somewhere where there's not going to be any traffic? So that's how you want to try to view something in a business model like Twitter, but you want to use that viewpoint in terms of when investing in stocks. Like, how is this company affected by this? How does X and Y get to Z or not get to Z? So now with this user growth that's declining, what is Twitter going to do to increase that user growth? Well, that's like the golden question. They seem to show that they can monetize, but that monetization is going to decrease as the volume of people on it are decreasing. Now, Twitter, of course, has been used by companies like ESPN, a lot of local news sources. So it's still going to get its use. But when you have like retail individuals like ourselves who are, shopping and looking for certain information, we're not really going on Twitter anymore. A lot of times it's getting heavy use when in terms of like you have events like the Grammys, the Super Bowl, or the World Cup. It has a lot of traction. But when those events go away, Twitter kind of just dies back down again. So from a short-term perspective, you want to look at it like, okay, Twitter might be popping. We just had the Grammys. We got All-Star Weekend coming up. I'm sure there's other award shows that are coming up. So it's going to be fairly frequent. And with the sign of revenue growth, that's a good sign for the stock. So maybe in the short term, it might be a way to play this stock. And we mentioned on Monday about how it has, we're looking at a target of about $54. We'll see if it can get there. But that's kind of like our cap point that we're looking for. However, from a long-term viewpoint, what is Twitter going to do to continue to grow the company? And if user volume is decreasing, then those companies that are paying for those ads on that platform might not be paying for them anymore because there's nobody there to look at them. And that's going to hurt the stock in the long term. Now, we're not saying that this Twitter won't figure it out. They won't be able to figure out what to do. But this is what you can do as an investor in present day time to figure out what to do for the long term. And you can continue to watch the stock if you like it. We recommend that you invest in companies that you're familiar with. And as you get better and better with your investing strategies, you can maybe look into companies and find some of these companies that you're not so familiar with. But Twitter, everyone knows about, and this is just a way to view the company. This is a way to look at it in the short term. Okay, this younger generation is semi-younger generation is still using Twitter to some extent, so it's okay. But the even younger generation after them isn't using it at all. So how is that going to affect the company in 5 to 10 years from now when those kids are still using apps like Facebook and Instagram, Snapchat? Maybe it's even going to be something new out. What is Twitter going to do to fix that situation? That's going to be your long-term viewpoint. In the short term, it's still stuff that's happening, still things that are popping, people are still using it, so you might be able to capitalize. So that's a way just to look at a company when you want to view it on a short-term and a long-term perspective. You want to gather all the details and see how is this going to affect this other company. I know we mentioned a long time ago on Market Mondays about how oil prices had been going down by a lot, and that was going to affect other companies. So say, for instance, airline stocks started going up a little bit. Even you might want to look at some restaurant stocks because now people are saving money at the gas pump, so they have extra money in their pocket. So some might save it, but some might say, you know what, I can get that extra cocktail when I go out to the bar. Or, I can take that vacation because I got some extra money to get that plane ticket. So that's the way that you want to view things in terms of with stocks. You want to look at it from a general perspective, and then you can start applying some of that fundamental and technical data that we really try to get into, and really see how you can become a great investor.